the strategic Bitcoin reserve. People, I didn't really realize that people thought they're going to announce the strategic Bitcoin reserve, and then that's it. Bottoms in for the crypto markets. We're off to the races. We're going to all-time highs because, hey, if the U.S. government is going to be buying in Bitcoin, everyone's going to want to front run that as soon as possible.
I agree. That's what I think. I don't know why Bitcoin is doing so poorly. Right now, Bitcoin is at 82.8. I think this is ridiculous. And I feel like people are not responding to the overwhelmingly positive signal that Donald Trump put out by creating this Bitcoin reserve. Something is wrong. The market's being manipulated. It should be up to the moon right now. Tell me why not.
Well, what's wrong and what can be rectified is that Kamala should have been president, and then when she is in 2028, crypto is going to be all the highest. No, so what's wrong is that uh, first of all, just on the surface of it, if you guys go take a look at the Traders Post video that I did last Friday, hey, with Peter on Traders Post, I forgot you're in that you stood in for Mike. We talked about and showed video of like that the strategic Bitcoin reserve is just to hold Bitcoin and other crypto assets that government has already seized. So they're not even buying anything at the moment, right? And I'm fine with that. That's totally fine. If they said all of a sudden, okay, now we're going to implement on a plan, and we're already have all the things in the works, and we're going to be buying $2 billion worth of Bitcoin every week, and they spin that up and start it right away, I'd be like, okay, this is a whole scheme. This is all planned, and Bitcoin is MI6, Mossad, intelligence, CIA. And finally, they turn the screws loose on this thing. The fact that they're like, not only we're just going to announce this, Trump was like, hey, XRP, Sol, ADA, we got you covered. And then later on, they're like, oh, excuse me, also Bitcoin and Ethereum. And then David Sachs, Cryptoczar, comes on, I believe it was CNBC, and he says, he just said those things because they're like the top on the like list of coin market cap. They didn't even consult with any of the people. I go, this is exactly what I want. I want to sort of like fly by the seat of the pants. We feel the wind shifting towards Bitcoin. Let's just say Bitcoin stuff out there. That's great. And then the other point, and David Sachs even mentioned this. Is it David Sachs? Yeah, I think it's him. They don't even know where all the crypto is. Like, if you think that the crypto that the government has, it's sitting on a Trezor device inside of Fort Knox, and they just need to be able to connect that to the systems in order to make everything work. That's not the case. Apparently, it looks like these cryptos are just all over the place in all kinds of different departments.
What?
With God knows who's controlling them. USB sticks over here. You know,
Why don't they
I
just
wouldn't be surprised
buy?
if someone has their 24 word key seed phrase on their computer screen and they got fired because of Doge, and no one even knows where the seed phrase is. It'd be just like the government to be like, hey, we we just accidentally locked $12 billion worth of Bitcoin. Who do we contact in order to fix this? Nobody. I wouldn't be surprised. So they're not buying crypto yet, okay? The whole point of the strategic reserve, the whole win of it, has nothing to do if the government buys it. Peter, it has nothing to do with whether the government buys it. What it matters is that the government feels like they need to say that they will. Okay, Bitcoin people, Bitcoin maxis, you won. You won. You got the president of the United States who's saying, hey, we got to take a strong look at this crypto thing. So you know what that does with all the other countries? Just like you guys have been teaching us this whole time, game theory-wise, Max Kaiser-wise, that they're going to have to buy it too. Now, the other countries that don't have an aspiring monarch or whatever is going on over there, not that I'm against monarchy, but that's what it seems like is the case. Who knows? Did you hear Donald Trump's son wants to maybe run for president in 2028?
No.
Yeah. So
Which one? Which
fine.
son?
Eric. I think it's
Really?
Eric or Don. One of them. The one who talks all the time.
Okay.
Fine, whatever. But other countries that don't have those types of leaders, who are also saying that they're going to have to deal with, they might have to use Bitcoin as a strategic reserve, they will buy. And they don't have necessarily a bunch of cryptos on some USB keys floating around some desk somewhere.
Well,
They
they
probably
might
have
have some crypto millionaire billionaires that can Jack Ma. You know, you can You can
Well, that
disappear.
was one of the things for the seeing that when I saw the what is it, the mugshots of all the people who are part of the White House Crypto Summit. Brian Armstrong, Robinhood CEO, the David Saxes, all these different people, Michael Saylor. I go, okay, so these are the crypto barons, right? These are we're talking about, right? These are. I mean, you don't get to that spot without breaking a few skulls here, making a few enemies. They're at the top there. Plus, they didn't have our boy Charles Hoskinson there.
Well, I mean, why would he be there? He's anti the government being in crypto, no?
Well, even if that wasn't the case, they weren't even trying to make a show of, hey, let's do this to make sure we're inclusive of the whole thing. They're just like,
I think they got the club in, and Charles is not part of the
right,
club.
right. So that means the opposing team. I mean, I'm saying that loosely. I'm not trying to put all the Bitcoin maxis in there. I'm talking about the people who are out there CEOing and billionairing all over the place about Bitcoin. These are the people not to be trusted. Like, these are the people that Bitcoin was set up in order to fight against, the whole oligarch system, the whole native financial system. Like, why on earth the people who are gung ho of integrating the cancerous financial system with the cure? I'm not, let's spread the cancer. I'm not even sure why people are praising these people. The whole idea is that the system would work through incentives on its own, and Joe Blow can have just as much say or as power as anybody else. But no, it turns out.
But that's impossible.
Well, I understand that's impossible. I'm just saying that the idea, the pitch for Bitcoin is that it would take over the world and overtake and become the new financial system.
And you don't see governments buying into it as part of that overtaking.
Well, it's both forces at once. There's the force of overtaking, and then the other force that they don't want to be overtook.
But that's destiny.
Yeah. So the people who are out there representing Bitcoin and crypto inside of this summit are clearly on the side of the opposing force. They're not they say they're pro crypto, but that's exactly what I would expect from villains.
Well, okay, but don't the majority of the population, they're not even paying attention to crypto. They don't
Right.
own it. They don't understand it.
Yes.
That's not going to change grassroots. It has to, at some point, become at the top. And then people wake up to, hey, what is this thing that the government is doing? Then they understand what crypto is. And then they kick out the barons or whatever.
Sure. But what I'm saying, where we are at the moment, actually, let me put it in terms I think you might understand. These people who are
When a
representing
mama and a
crypto on the
dada love
behalf of
each.
people
Sorry.
to the American government are like the Nazgul.
Okay, could you repeat that? I was talking over you. Start over.
The people who are representing crypto on behalf of the population to the American government are like the Nazgul, right? Before they start donning their big wraiths and all these sort of things, the wing beast, they come as bearers of gifts, presenting the 5 and the 7 and the 3,
The Rings of Power.
right? The rings of power, and the dwarves put on the rings of lust and greed, and the men put on the men were the ring wraiths, but they're given these. They're speaking on behalf of the people with this promise of goodness, but the people aren't there. It's a bunch of billionaires and powerful people. So Alabaz, don't believe anything that they're saying, that they're really on behalf of the people. They're there to make money for themselves, which is totally fair. That's what they're there for. And the fact that they don't have Bilbo Baggins in the mix, Charles Hoskinson, they didn't invite him over, means that they're not interested in that, in really incorporating everybody within the crypto space, which is fine. But all that to say, the liquidity is not starting now. The game theory is in practice. The play's there. The pitch now for $1 million Bitcoin to me now makes way more sense. Way more sense. And that's a 5, 10-year, 20-year game. I'm not saying to $1 million. I'm just saying the upward trajectory. So the floor is in, people. I mean, as far as like overall, like, can Bitcoin go to zero? I don't know. Even Peter Schiff was like sort of like devil's advocate on Twitter, making the case, well, Bitcoin, I could understand why, why they would put it in, but why would they put these other coins? Well, we're chipping away at Schiff, buddy. We're chipping away at Shiffy. So it's making headway.
Well, this is probably the best case scenario if you believe in crypto, because you can see directionally where it's going to go pretty solidly, but the price is still low.
It's low, $83,000 low, right?
Yeah, I mean, buy, right?
Well, so that's the thing. So the question is here, and that's what I want to shift over here to, is the idea of, do we have the cycle top and are we headed to the cycle low? So just as a quick aside here, people have to understand that there are multiple cycles at work at any given time within the economy and the financial markets. With the business cycle, the debt cycle, the liquidity cycle, and the inventory cycle. So if I were to ask Peter about the inventory cycle, what do you think that involves?
Well, there's expectation. So people who have to fill up their inventory, they have to buy before the demand is there. And so there's this, it's like a leading indicator for
Right.
something else.
Exactly. So you have this whole manufacturing process. I'm very good, Peter. You have this whole manufacturing process where you actually have to like mine or grow or collect the raw materials, pass it through this, through manufacturing, refinement, through production, goes into wholesalers, to retailers, to your kitchen sink, right? So the whole process. And that process is driven by the demand at the end by the consumer requesting those goods. And the demand has to be consistent and long enough and like last long enough so that the signal actually gets to the beginning of the chain so that they change their practices in order to move forward. And once inventories get packed to a certain degree, there's only a limit to how much an inventory, how much people can pre buy something, how they could store it. Once that happens, then there's a cap. Then the orders that, even though the demand might still be there, the orders that the retailer and the wholesaler are making, the orders up the chain diminish. And so the people further up the chain, they get to see, hey, there's less demand coming in. I'm going to start laying off people. I'm going to start mining less. I'm going to start growing less and that sort of thing until things calm down because they need to, they have risk on the line. They're putting their money, their time, their capital on the line. So they have to slow that down. And that slowdown then gets reflected later on down the train. It moves forward and then the inventories start to diminish. They're not filling up the inventories. The inventories are starting to diminish. The demand starts to weaken. They start laying off people. They lay off people. Less people have money to buy stuff, and we get down to a low end of a cycle. And when that gets down to the lowest, then the demand starts picking up a little bit as people are like, "Hey, I haven't had this for a while," and then the signal starts being sent back to the beginning, and you have this whole thing happen over and over again. It takes about 5 to 10 years for this. Well, sorry, no, it takes less time than that, but basically that cycle ebbs and flows and ebbs and flows, and it could be exacerbated. There could be headwinds or tailwinds depending on what happens. Right? There's uh, uh, a year of frost for wheat or rice in one location and some major location more than before. That decreases the output, which causes the demand to increase, and it could have all these sort of imbalances within the system. But generally speaking, that's how it goes. That's for the inventory cycle. The business cycle. So the inventory cycle is almost one of the lowest cycles you could be on, and then you have the business cycle, which is the overall of all the different cycles. I haven't touched on liquidity and debt yet because I'm going to get on that in a second. But you have this business cycle, which is this 5 to 10 year period, which has to do all about the inventory systems, the employment schedules, the government spending, production of a nation, and you can imagine that all this also goes through cycles in the same way like the weather does, right? So you get this build up of production, and then it peaks out where, hey, we're not increasing our production anymore. Maybe government spending comes in order to boost it a little bit more. Then there's only a limit to how much more that can boost. It plateaus. People have more, have maxed out on their capacity, and now bankruptcies start happening, or the revenue start falling as people can consume a certain amount. Right? If you wanted to buy a table, well, you're not going to buy 5 tables in a year.
Right.
So if anyone who's going to buy the table bought the tables and replace the table for anything else that you want, eventually they get to the point where they consume what they needed to consume, the demand starts falling, and then that moves up the chain, and you have this whole cycle that happens. So the business cycle happens in that state. The key component of this business cycle that matters to us as crypto heads, that has nothing to do with inventory, right? This is one of the interesting things about crypto, about Bitcoin specifically, and that even though people compare it to gold, gold does have, in a sense, an inventory cycle,
Right.
right? Because you actually have to mine and store the gold, and then there's uses beyond just store of wealth or even a medium of exchange if that's what you're doing, for industrial use and jewelers. So this ebb and flow as you find more gold. It's the time it takes for it to be refined and processed. There's this whole ebb and flow that happens within the gold cycle that doesn't happen within the crypto cycle, like as far as inventory is concerned. What does affect that is debt and liquidity, right? So liquidity, that is the dollars that are flowing throughout the system. And so America, because it's the world reserve currency, one of their main exports, their main export is dollars, right? Little dollars, the currency that you work for day by day. And the availability of those changes how people behave. Just like if you felt like, hey, I have an overabundance of money, like my pay is secure, my job is secure, I just got a raise, I'm getting more money in, you have a higher propensity to spend. You might take a vacation if you haven't before. You might take a better vacation or a longer vacation if you have more money to spend. You might decide to have kids, more kids, if you decide to get more money in. Your behavior will change depending on how much liquidity you have access to. Not just your net money, but how much money you expect to get, right? And this will affect how much risk you're willing to take. When the economy is doing well, that when the debt cycle is starting off, people feel like they can get a loan, they could start a new business. They could see demand is out there because people want to spend, and they might actually try to start a new business, create a new product, create a new service, or what have you, because there's a higher risk appetite. And then as more and more people succeed in that, it causes people who are on the sidelines, hey, maybe I'll start a business too, because those two people started a business and it worked. I'll start one too. But then you get down to the point where the 10th person, the 20th person says, hey, I want to start a business too. I'm going to be the late adopter over here, and it's too late because they've already taken all uh, they've already taken all the demand out there, or all the people who are going to lend as much as they have capacity to, and that sort of thing. So demand comes down, lending goes down, and then you have defaults that start happening, bankruptcies and defaults that start happening. So in the debt cycle, you accumulate debt as you first start, and then it peaks out and you move down. And in that down cycle, you get a bunch of bankruptcies and liquidations. So this causes a debt cycle, which is part of the whole business cycle. And so, but and crypto does have a little bit of that. You can leverage crypto, and so you have these liquidations cycles that people take too much risk and get over levered, and then you have this deleveraging effect. So the final thing I want to see here is then the liquidity cycle. So the liquidity cycle is the mechanism by which new dollars, new currencies are issued into the global economy. And that happens through there's only certain entities that can actually make dollars. So new dollars get created by banks. So any type of lending that happens, if you lend somebody $1,000, that debt on your book is still 1,000. You're owed 1,000. That's worth money. That's, you get an interest payment for that. But that person has $1,000 now that they can spend. Right? They have $1,000 more than existed before.
Yeah.
And then when they circulate that money to other people, those people are also using it for their own lendings and debts and loans and all that, and it generates more and more new dollars from the initial dollars. We've all learned this from the fractional reserve system. And so these cycles happen, are you can see them because it's the currency markets, right? You're seeing the currency fluctuate against each other in this aggregate way where you get to see what the liquidity cycle is like. So I just wanted to pull up here, real quick, a liquidity indicator that was made by, I mean, a lot of people are sharing around, but this particular one is made by Mike Christensen from Traders Post, and improved, I think, just slightly modified by me. So we have here the global liquidity index. So this purple line represents net liquidity. So as it ebbs and flows, the higher this goes, the more liquidity is being injected into the system, and the lower it goes, the more liquidity is being pulled back. This is caused by printing of money or contraction of money from central banks, from regular banks, through lending through sovereign nations, through financial institutions, through anything that produces debt and loans or currency, and you get this ebb and flow. And if you were to compare that, let's say we were to compare that to SPY, you'll notice here how it looks pretty similar, doesn't it, Peter?
Yeah. But
Because the stock market,
I've learned from Mike that you can put squiggly lines and make them look and compare them, make them look like they're the same, but they're not necessarily true.
well, it's pretty hard. Even a child can see that these lines are pretty well correlated, right? So this is the S&P, one of the stock market indexes, where we get this correlation. And when we compare it to Bitcoin, you'll notice we also get something similar over here. But what's interesting about Bitcoin is that it seems to respond even sooner to liquidity, in a sense. So if I were to offset this,
Is this because
actually,
the inventory cycle doesn't affect it?
well, yeah. So the inventory cycle doesn't affect it, and so it responds far quicker to liquidity conditions. It's almost like a cork on the top of a river, and as the river increases or decreases in liquidity, that cork moves up and down. Um, And so you can see here that I have this offset, and it's showing us here this peak matches this peak over here, this peak matches this peak over here. We have these consolidation levels, consolidation over here. This move up matches this move up, so it's pretty good. It's not exactly one for one, but it gives you a good idea. So we can see here that if we were to project out liquidity, the liquidity projected out shows that we're going to go up and to the right for liquidity, right?
Right.
So the chances are that we're at the low, that we are headed towards a cycle low. So if I put this on here, put wave on, you'll see that our cycle low, let's do it like this. So do you see here how, let's change this to logarithmic, how Bitcoin generally ends up at the bottom of this orange level at the cycle lows?
Yeah.
Well, the next cycle low that we have coming up right now, the earliest is around 40,000. So the
Oof.
idea is, are we going to fall? Are we headed towards 40,000, which is another 50% down? Right, we're about 20 something, 29, 20, yeah, around, no, 25% down, sort of. So the idea is going to head lower.
That,
Okay, so then we have to
that
make a
would
case for it.
that would be great news.
If we headed to the cycle low,
Yeah.
I mean, I feel that way, but people who are holding millions of dollars worth of Bitcoin, they don't feel that way.
Yeah, but I mean, if your time horizon is super short, then yeah. But if you're expecting it to go up, I wanna get as much Bitcoin as I can at that lower price.
I understand, and if I had my tools, I would have been buying around here,
Right.
but I didn't have my tools. Same thing over here, same thing over here. I just didn't know these things. So it's after losing a bunch of money that I realized I have to make these things in order to surface this information, and I'm sharing it with the rest of you guys.
Oh, that's
So
awesome.
here, thank you. So here we have the liquidity cycle that's suggesting that we're going to go up. But if we only have one, and that's like as of April, and a bunch of people on Twitter have been sharing this information, um, which makes sense. We're all seeing the same sort of information. Once you start seeing everything in the view of global dollar liquidity, it's hard not to see it. Now let's also compare it to the business cycle that I was telling you about. So we're going to head over to the PMI.
Wait, you were about to say something about um, what's coming next.
Yeah, liquidity is showing that we have an uptick, a massive uptick in liquidity. That'll bring us to almost so far to the highs that we had before here.
So, what makes you think? Oh, you were making the case. You were saying making the case about it retouching that orange line.
Yeah, so the question is, are we headed towards the cycle low? That's the question. Now, in never, we could always end up hitting a COVID thing like this where it falls off the edge and moves back up, and then how are you going to plan for that? Um, Unless you're Dr. Fauci, you don't know that the cycle goes like that. That's kind of a black swan event type of thing.
I'm beginning to suspect you've got beef.
All right, so that's global dollar liquidity. So let's take a look at the business cycle, at a proxy for the business cycle. So if we take a look at the Purchasers Manager Index, which is, let's do it over here. So the Purchasing Managers Index is a survey that's run on manufacturers who are smack dab in the middle of the inventory cycle. Remember, there's people all the way the miners, the growers, and all that at the beginning of the chain. And then it moves towards like chemical processing, refinement, smelting, metallurgy, all that stuff, and then it heads off to the manufacturing where they're actually creating some of the base items or the specific items that will be sold by retailers and wholesalers, then to retailers. So they're smack dab in the middle. And if you do a survey for them, they're not only getting an idea of what the demand is from the regular consumer, they're also getting an idea of the orders that they're actually passing up the chain. Whereas if you go further up the chain, they don't have an idea of the demand at the end, and the demand at the end has no idea, how much chemicals they're buying at the chemical factory in order to make whatever. So the manufacturers are great for that, and the Institute of Supply Management tracks this. So if we take a look at this, let's take a look at it on the weekly. Also, this ebbs and flows, right? In fact, if we were to take a look at that on its own, because right now we're just seeing it in the history of Bitcoin. If I were to show you the PMI over here since the 1948, I mean, it seems pretty clear to me. It's just this ebb and flow, right?
Mhm.
Again and again and again. So when this goes up, it means the expectation that things are getting better and better. So it's an expansionary phase, at least an expectation. And then when it goes down, we're head towards contractionary phases.
So
So
supply
we take,
management does Bitcoin does care about supply management because it will let us know if people have money to buy Bitcoin.
yeah. So remember, the business cycle is overall over the debt cycle, the liquidity cycle, and the inventory cycle. And one of the things that affects liquidity is demand from the regular public, right? Because they're the ones taking out the loans. It's businesses that are taking out loans. They're the ones being affected by interest rates. They are in a sense one of the drivers of liquidity. So remember when I was saying that you can get new liquidity if you take out a new $100,000 loan? Well, someone has to take out that loan.
Right.
And that person will only take out that loan if they have an expectation that they'll be able to create more productivity to be able to pay back that loan and make extra money. So they all interplay together. But the reason I was making the distinction with Bitcoin is that Bitcoin doesn't immediately respond to the inventory cycle because that's slow play. It immediately responds to the liquidity cycle. So Bitcoin is actually a leading indicator for employment,
Hmm.
for interest rates, for a bunch of these things versus the other way around. So over here, we're seeing that we're ticking up. Right now, we just passed the 50% mark on this diffusion index for the ISM, which means that we're just ticking now into bullish. Like if you were to say that this is the bottom of the cycle, which it would have been, right? 22, 23, 24, bottom of the cycle, higher highs, that means we're at the start of the next cycle. Now, how high that goes, we don't know, right? It could go up to here or whatever, but that means we're about halfway to 1/4 of the way through the cycle to begin with.
Is that good news or
So
bad news?
that's good news. The idea there. So if we were to compare this, if I go back here to the chart, Bitcoin, where does Bitcoin bottom? Bitcoin bottoms when we're falling into the recessionary periods of these charts, right? So over here, it starts to fall. So here we're at the start of the cycle of falls. Over here, this is the low COVID lows. Over here, the bottom, we were falling. But if we're rising here, then the chances are is that we're rising still. Does that make sense?
Yeah, so don't wait for 44 to buy. That's what you're saying.
Yeah, I would not wait for 44. If you get that, great. Or what is it, 40,000 right now? Um, if you get that, great. Unless you think this is rolling over, that we're going to roll over. But you sort of don't want to make a bet like that because you're looking at what the numbers say. And then the final thing I want to show there's actually a bunch of things I could show for this, but I want to be too long-winded. I know I said I wanted to be short, but here we are. If I take a look at our volume-weighted trend, and I switch this to the monthly, this is one of the indicators people are going to have within the Sacred Profit library. You can see here that we get the downdraft in these cycles usually when we get the second lower high after. So the trend is green, turns yellow, and then turns red, then goes up to a second lower high, and then we get red again. Actually, it doesn't have to be a lower high, but it does have to be a second red. So like over here, we only got one, which is our dip. We moved up. Here we got one dip, moved up. Here we got one, but here at the cycle top over here, we got one. It turned green for a second and then red again. Over here, the double top that we had in the 2021, we had it down, but liquidity was still headed up. So liquidity was still headed up. So we moved back up, and then it's only when it started to roll over that we headed down here, and we got a red and then a second red, lower high, and then we fell. Here was a scary one. We got red twice, but this one was a higher high. This red area over here was a higher high versus that one. But we could easily have seen even a deeper dip, but we didn't. We got an increase of liquidity, and then here again. Actually, this was a lower high. I got to take a look at these guys again. What I want to pay attention to here is that in general, liquidity is moving up and to the right. We're moving sideways or up and to the right. It's when we're moving downwards that it's a problem, and we're not moving downwards. So here I would be looking for a bounce up to a lower high before I even worried about a full drop below.
Mm-hmm.
All right. Well, that was my pitch there. So I just wanted to put that out there that just because the strategic Bitcoin reserve was mentioned, approved, signed into being, doesn't mean all of a sudden liquidity is going to be injected within the system and Bitcoin's going to go to the moon. Notwithstanding, I don't even understand why anyone wants a strategic reserve. Why do you want more Bitcoins off the table? People actually, it's like burning Bitcoin. Hey, we can have more off the table and ours will go up. It's like, I don't even understand. I don't even get why people want that. First, I thought it was infinitely divisible. What do you care? And if it's going to go up in price because there's nothing left for other people, that's let me buy all the comic books and destroy 10 of them so that the 11th one is worth more. Like, I don't get it.
Well, I mean, it doesn't limit people's access to Bitcoin. Like you say, it's fractional Bitcoin can be purchased. So what difference does it make how many there are?
I just don't. They're like really happy that the idea that governments will hold Bitcoin and not sell it. It's the whole Michael Saylor idea. We won't sell any. I don't get it.
You should listen to more Michael Saylor.
I listen to a lot of Saylor. I want to believe. I want to be wholeheartedly a believer. I just don't.